right? Pay over supplier to the 4,000. It means decrease in liability, accounts payable to cash. Cash decrease mean credit 4,000, 4,000. If you post this entry, it would be a debit side. So this must be the case that we pay to our supplier 4,000. So this is how we analyze the account. Normally, we analyze either supplier account or either customer account so that we can find out that how much is our cash receipts from our customers and how much we have paid to our suppliers, right? So this figure shows us what? This is the only logical, rational, possible reason that 4,000 is that we paid cash to minimize or to pay our liabilities, right? And now the last one is correcting accounting errors. So errors are categorized by missing accounts or human errors. So something can be, because we are humans, we can make the entry. We are not robots or computers, right? So even though the software is made by, it is computerized, but we need to put some entries. For example, if we sell 200 worth of goods, but we write down 20, we omit 10. That's a human possible error, right? Or what we write it down, instead of 200, we write it down 020, right? Then we make a reverse entry too, because remember, if the day has passed, you already record the entry, and the day has passed, next day you cannot change the entry. Once that is written, that is written. You cannot change that. Then how you can do that? You can adjust that. So if you write it down 20 instead of 200, in order to make this 200, how much you need to add to make it 200? 180. It means you need to show that this is because of human error. So we are adding 180 worth of sales more. So you create an entry, and in explanation you write it down that we made a human error in that transaction. So that this transaction is basically occurred, or we are posting this transaction because of human error or accounting error to, and we refer that one, for example, is in June 5 or June 10 whatsoever. So let's just see. So here we go. So don't just worry about this divided by 2 account or missing account. Just remember that the missing account means that you missed some kind of account. How you can do that? You create the entry, you make this logical connection, that's it. For example, here we have a chart of account. What is the chart of account? In which companies has given you that whatever is the transaction, it has to be in those accounts. You cannot create the account from your own because the account's already created. So it means you have a limitation to post entry either one of these accounts. You cannot create the account, you cannot change the account from your own. Okay, at least you have to post this according to what the company has given. So we call this chart of accounts. So the normal balance of the account, I told you, asset has a normal balance of debit, liabilities has the normal balance of credit. Similarly, all the stockholders equity account, they have a credit balance, except dividend and expenses, they have a normal balance of debit. If question is silent, and by saying that liabilities balance is 4,000, it's automatically, we assume that it's a normal balance, and normal balance of liability is always credit. Unless the question itself says that we have a debit balance of liability 400, then we write it down on the debit side 400. Understand? And it makes sense as well, because we are, for the rule here is assets is equal to liabilities plus owner's equity. So if we are making increase in asset debit, then on the other side of the equation we are increasing our liabilities and our owner equity with increase, mean we are taking as credit, right? And we have two exceptions. That is, dividend and expenses, they are always debited. Their balance must always be debited. Okay. So now the account formats. So one T account that we just covered, T account format, and one is called the 4-column account. 4-column account is more detailed one in which you talk about the dates, the item. For example, the account is debited by, this is a cash account. It is debited by, for example, account receivable, and this is credit. We don't have a T account here. We have debit item, credit item, credit account. For example, land, we purchase land of worth 40,000, and this balance account basically is telling you right now the balance of your account. So normally, for example, it balance out on day-to-day basis. If this transaction occurred on April 2, what is the balance of the cash account? You see which side is greater, debit side or credit side? Debit side. So you write it down, debit side balance 50,000. Next day we have a transaction of 40,000. So which side is greater or which side? So you see that 50,000 we have a balance, and now credit side is 40,000. So which side is greater? 10,000 still debit side. So how much we owe in cash, how much we own in this cash account, or what is the balance of cash account? Right now we have 10,000 cash left because this is debit side, right? So this is normally rare cases that we have 4-column, but remember 4-column is more detailed one in which we also write down the detailed item name as well. And then we also maintain running balance. Normally we close the account after some period, but here we are closing the account on every date or every transaction basis. See, we are close this account, this transaction, we have balance of 50,000. We close this transaction, we have balance remain 10,000, right? This is called the 4-column format. So T account, well, I already show you how we are going to do that. So here we go. We have a transaction here. So I'm going to solve it. Normally, I planned it to solve it in breakout room, but we don't have much time, so we are going to solve it here. So the managers of the Whole Food Incorporation may consider borrowing 100,000 to buy equipment. Now, considering to see how the two transaction would affect the whole food market, the manager can go directly to T accounts. So if we borrow, right? And what if we buy? If we borrow, what happened? We borrow the money and then we buy equipment. Basically, it has two transactions in one transaction. Now, I would be a little bit slower here. If company borrow the amount and then to buy the equipment. First, the transaction is company borrow the amount. When company borrow amount, cash increase, debt increase as well. Cash increase mean debit, debt increase is liability increase being credit. So first transaction would be cash to debt. When you post into a cash account, cash T account, cash is debited 100,000. Our A transaction would be cash to debt account, cash to debt 100,000, right? So you see 100,000 here, right? So we create debt as a notes payable. So we have account name notes payable. So we on A, when we borrow the amount, cash to notes payable. If we don't mention the name, we can also use debt as well. 100,000, 100,000. You put cash here, notes payable here. To buy equipment, it means the cash we received, we spend it on buying the equipment. It means cash spent, the next would be cash spent to buy the equipment. Now, cash spent to buy the equipment, how we record it? Cash decrease, equipment increase. Cash decrease, credit, equipment, debit. It would be equipment to cash, 100,000. So equipment would be debited, cash would be credited. So in this case, when you borrow the amount to buy something, you see, cash effect would be nullify, right? One side it is debited and one side it is credited. And if you write down the combine or one, simply one, entry, it's also okay, because ultimate effect would be on cash is 0. If you write it down, equipment to notes payable, this entry is also fine. You see that 100,000 is, we have the left account 100,000 debited and 100,000 credited here. If we use, even if we use the cash account, because cash account is one side is credit, one side is debited with the same amount, so effect would be 0. You can directly write down this entry, equipment to notes payable, or you can go through this 2 entry process, A and B, right? It's up to you. So we have now completed this chapter. We have our assignment 2, and the date would be our next lecture date. And remember, please, please, please make a Word file. You can copy paste all your work pictures. You can paste in a Word file and also rename it. 3 things must be in your, you must rename the file, not add one page by saying your name, your student ID. No, rename that file. The Word file must include your student ID, must include your name, and must include the assignment number. For example, if I need to submit my assignment 2, I would be taking pictures and make a Word file and rename that file accordingly. For example, my student ID, and then Jamal, and then I can write it down assignment 2. Those who are having at least 2 subjects with me, they also add one thing. For example, this is accounting assignment, or you can write it down the subject accounting. If managerial accounting, then managerial accounting, or economics, or then write it down the economics. Okay, everything is clear?
Yes.
Ajim, Junpyo, David, Min, Minsu, Sipade.
Yes, sir.
Right? So I would be uploading the assignment 2 to the group as well, and also on our Blackboard as well. So you can download the files, all the lecture files, chapters over there. Okay?
Yeah, perfect.
If you have no question, then I'm going to end this meeting.